Ever wish you could, just get inside Warren Buffett's head for a little bit? Especially when he's talking investing.
Yeah.
Well, today's your chance. We're doing a deep dive into his latest letter
Okay.
to Berkshire Hathaway shareholders.
All right.
It's basically a masterclass in long-term thinking.
Yeah, it really is. This letter, it's not just about the numbers, it's about Buffett's philosophy, his process,
Right.
how he sees the world. It's actually fascinating, even if you're not
Right.
a Wall Street wizard.
Exactly. And this year, he kicks things off with a bit of a head-scratcher.
Okay.
He points to Berkshire's net earnings, which went from $90 billion in 2021
Uh-huh.
to a loss of $23 billion in 2022.
Wow.
Then back up to $96 billion in 2023.
Okay.
Talk about a roller coaster.
Yeah.
I mean, what's driving those wild swings?
He actually uses that roller coaster analogy himself.
Does he really?
He does. And that's where things get really interesting. He wants
Wow.
to make sure that his shareholders aren't thrown by those,
Yeah.
short-term fluctuations. He's much more interested in what he calls operating earnings.
Right.
Those reflect the actual performance of the businesses themselves.
Okay.
And in that regard, the picture is much steadier. $27.6 billion in 21,
Okay.
$30.9 billion in 22, and $37.4 billion in 23.
So he's saying don't get distracted by the daily market noise.
Right.
Focus on the fundamentals. Sounds just like him, always cutting through the clutter.
Absolutely. And this leads us to one of Buffett's core beliefs.
Okay.
That is, while the market might behave like a voting machine in the short term,
Yeah.
driven by emotions and speculation, it ultimately becomes a weighing machine,
Right.
reflecting the true value of companies over time. And that's why he's always on the lookout for what he calls businesses with good economics that are fundamental and enduring.
Those are words to live by, right?
Yeah.
But what does that actually mean in practice?
For Buffett, it's about finding companies that generate consistently high returns on any additional capital he invests. He's not looking for quick flips or flashy tech startups. He wants the steady earners, the reliable workhorses of the market.
Right.
In fact, he contrasts these with businesses that are sinkholes,
Uh-huh.
those that constantly demand more cash without delivering proportionate returns.
And I bet he's got a few choice words for those sinkholes. But here's the thing. Finding those wonderful businesses is one thing, but what about the people running them?
Yeah.
He quotes someone from way back in 1863, Hugh McCulloch,
Right.
about never dealing with a rascal.
Oh, wow.
That seems pretty relevant even today.
It's essential, and it gets to one of the biggest challenges for any investor, especially one at Buffett's scale.
Yeah.
Finding managers who are not only competent, but trustworthy.
Right.
He's very candid about how difficult this can be, admitting that sincerity and empathy can easily be faked.
Right. It makes you realize that even for someone at his level, it's still about people. You can have the best business model in the world, but if you've got the wrong person at the helm, you're in trouble.
Precisely. He'd rather have a manager with an IQ of 130 who thinks it's 120
Wow.
than one with an IQ of 150 who thinks it's 170. Humility and self-awareness are invaluable traits, especially when you're entrusted with managing billions of dollars.
And speaking of billions, Buffett tackles a pretty significant issue head-on in this letter, what he calls the too big problem.
Okay.
He's basically acknowledging that Berkshire Hathaway's sheer size,
Right.
with a GAAP net worth of $561 billion, makes it harder to find those game-changing investments.
Right.
It's like trying to move a mountain with a teaspoon.
He uses a great analogy. He compares Berkshire Hathaway's net worth to the rest of the S&P 500 companies. In 2022, those companies combined had a net worth of about $8.9 trillion.
Okay.
Likely not much more than $9.5 trillion in 2023.
Yeah.
To make a significant dent in Berkshire's performance, he'd need to find investments that are massive,
Right.
even by Wall Street standards.
And let's be realistic, those opportunities don't just fall into your lap every day, even when you're Warren Buffett.
Exactly. He even jokes that those days of strolling down Wall Street and picking up bargains are long gone.
Right.
The reality is that only a handful of companies could truly move the needle for Berkshire, and they've all been thoroughly scrutinized, not just by him,
Right.
but by countless other investors.
So if those mega deals are off the table, what's the strategy? How do you navigate that as an investor, especially when you've got a portfolio as massive as Berkshire's?
Well, Buffett has a strategy,
Okay.
and it hinges on a key insight. Markets can be irrational,
Okay.
while others might panic when things get volatile.
Right.
He sees those moments as opportunities.
Right.
He calls it his not-so-secret weapon.
So when everyone else is running for the exits, Berkshire's ready to go bargain hunting.
I like it.
Precisely. He's been saying for years that markets are more casino-like than ever. He sees speed and technology, while powerful tools in the right hands, as potential accelerants for panic and mispricing.
And that's where Berkshire's size, which some might see as a limitation, becomes a huge advantage.
Because they've got the cash on hand to make bold moves when others are frozen in fear.
Exactly. They're not reliant on banks or debt financing when those markets seize up.
Right.
They can act decisively, swooping in with a checkbook when others are struggling to stay afloat.
Wow.
It's like having a financial fortress ready for any storm.
That's a great way to put it. Now, I know he can't reveal all his cards.
Right.
But he does offer some insights into specific holdings.
Okay.
He reaffirms his faith in Coca-Cola and American Express, two companies he's held for decades.
Right.
No buying or selling in 2023, though.
Okay.
Why stick with them for so long?
It goes back to that idea of good economics that are fundamental and enduring.
Right.
These companies have products that travel, meaning they're globally recognized and consumed.
Right.
They tap into those deep-seated human desires for refreshment, in the case of Coke,
Yeah.
and for financial security and convenience with American Express.
Right. And let's not forget the power of compounding. Decades of consistent earnings growth and dividend payments can turn a modest investment into a fortune.
Absolutely. He even asks rhetorically in the letter, could I create a better worldwide business than these two enjoy? I think we all know the answer to that.
Yeah.
But what's fascinating is that he puts two other companies in the same category, businesses he plans to hold indefinitely, as he puts it.
Okay.
One is Apple, which makes sense given its dominance in tech.
Right.
But the other one caught me off guard, Occidental Petroleum. That doesn't seem like a typical Buffett stock at first glance.
Right. It seems a bit counterintuitive, especially with the world moving towards renewable energy.
Yeah.
What's the story there?
It's all about looking beyond the headlines and understanding the bigger picture.
Okay.
Remember how we were talking about Berkshire being prepared for financial disasters?
Yeah.
Occidental plays a key role in that strategy.
Okay.
He reminds us that back in 1975, U.S. oil production was around 8 million barrels per day. Though leaving us heavily reliant on foreign oil.
Right.
Not exactly a position of strength.
So how's the picture changed since then?
Significantly. Thanks to the shale oil revolution, U.S. production has surged to over 13 million barrels a day.
Okay.
And get this. Buffett points out that Occidental alone pumps out nearly as much oil annually as the entire Strategic Petroleum Reserve.
Wow.
It's a game changer in terms of energy independence.
Wow, that puts it into perspective.
Yeah.
It's not just about the profits. It's about having a secure and reliable domestic energy source.
Exactly. And Buffett understands that in times of global uncertainty, having control over essential resources is invaluable.
Right.
But he doesn't stop there.
Okay.
He also highlights Occidental's investments in carbon capture technologies.
So he's not ignoring the environmental concerns. He's looking for solutions.
Precisely. He acknowledges that carbon capture is still unproven on a large scale.
Right.
But he sees it as a potential game changer in mitigating climate change.
Right.
It's a classic Buffett move, investing in both the present and the future.
Managing risk while keeping an eye on long-term sustainability.
Right.
And this isn't a small bet either.
Okay.
He mentioned that Berkshire owns 27.8% of Occidental, with warrants to buy even more.
That's a serious commitment. Okay, so I've got Coke, AMMX, Occidental,
Right.
and then he mentions an intriguing international play. 5 Japanese companies.
Right.
He keeps it a bit of a mystery at first, though, not revealing their names in the section we're looking at.
He does love his cliffhangers.
He does.
Don't worry, he reveals all a bit later.
Okay.
He's talking about 5 Japanese trading companies: Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo.
5 massive companies, and Berkshire owns around 9% of each.
Yeah.
That's putting your money where your mouth is.
It is.
What's so special about these companies?
A few things.
Okay.
Firstly, he's impressed by their shareholder-friendly policies, something he often finds lacking in U.S. companies.
Okay.
They've been actively buying back their own shares, which increases the value for existing shareholders like Berkshire. That's always a good sign.
Yeah.
That means they believe their stock is undervalued.
Exactly. And it's something Buffett consistently advocates for.
Right.
He also highlights their approach to management compensation,
Okay.
which he finds much more reasonable than what we often see in the U.S.
Okay.
They're not excessively rewarding themselves with huge bonuses and stock options.
Yeah.
Instead, they're focused on building long-term value for all stakeholders.
It's refreshing to hear,
It
right?
is.
Yeah.
And here's another intriguing detail.
Okay.
Buffett financed most of those Japanese investments with yen-denominated bonds.
Interesting.
He even mentions that Berkshire holds more yen-denominated debt than any other American company.
But why go through all that trouble? Why not just buy the shares with U.S. dollars?
Because Buffett understands the complexities and risks of currency fluctuations.
Right.
He readily admits that he doesn't believe in trying to outsmart the currency markets.
Yeah.
By financing the investments in yen, he essentially neutralized the risk.
So instead of gambling on the yen's movements, he took currency risk out of the equation entirely.
Exactly.
That's pretty savvy.
Yeah.
Okay, let's shift gears for a moment and talk about a couple of Berkshire Hathaway's core businesses, starting with BNSF, the railroad company.
Okay.
I get the sense there's a bit of a love-hate relationship there.
That's a great way to put it.
Yeah.
He clearly recognizes the essential nature of railroads, calling them essential to America's economic future.
Yeah.
But he's also upfront about the challenges they face.
Yeah, he uses the phrase, railroads eat capital.
Right.
That doesn't exactly sound like music to an investor's ears.
No kidding. And he backs it up with hard numbers.
Okay.
He points out that BNSF has spent a staggering $22 billion above and beyond its normal depreciation costs
Wow.
in the 14 years since Berkshire acquired it.
$22 billion. You could buy a small country with that kind of money.
You could.
But I guess that's the nature of the business when you're talking about maintaining thousands of miles of track, bridges, tunnels, and locomotives.
You're absolutely right. It's a capital-intensive business, no way around it.
Right.
But Buffett makes a crucial point about this that often gets overlooked.
Okay.
Because of those massive ongoing capital expenditures.
Yeah.
The dividends BNSF pays to Berkshire will always be significantly less than the railroad's reported earnings.
And why is that?
Because they're constantly reinvesting those earnings back into the business just to keep the trains running.
Right.
So while BNSF might look very profitable on paper,
Right.
the actual cash flow back to Berkshire is much lower.
That's a really important distinction for investors to understand.
It is.
It's not just about how much a company earns, it's about how much of those earnings actually flow back to the shareholders.
Precisely. And Buffett doesn't shy away from the less glamorous aspects of the railroad business either.
Okay.
He talks about the harsh weather conditions they face,
Yeah.
the labor shortages they're experiencing as fewer people are willing to take on those demanding jobs.
All right.
And even the sensitive issue of suicides on the tracks. He handles all of this with surprising candor and realism.
It's a good reminder that behind the balance sheets and earnings reports, there are real people and real-world complexities.
Exactly. Now let's move on to another core Berkshire Hathaway holding,
Okay.
one that Buffett admits has been a source of both pride and frustration. Berkshire Hathaway Energy, or BHE.
And this is where he drops a bit of a bombshell, right?
Yeah.
He openly admits to making a costly mistake in his judgment about the utility industry.
He does.
That's not something you hear from Warren Buffett every day.
You're right. It's rare to see him be so self-critical.
Yeah.
He explains how the regulatory landscape for utilities has shifted dramatically in some states, particularly in places like California and Hawaii.
Right.
And climate change has only added fuel to the fire.
So what happened? He mentioned something about a fixed but satisfactory return pact being broken.
Right.
What does he mean by that?
For decades, utilities operated under a pretty sweet deal.
Okay.
They'd project how much capacity they'd need years down the line, invest heavily to build it,
Yep.
and then be guaranteed a fixed return on that investment by state regulators.
Right.
It was a win-win. Utilities got a predictable return,
Right.
and the public got reliable service.
Sounds like a good system, so why isn't it working anymore?
Well, a few things happened.
Okay.
First, the regulatory environment changed in some states.
Right.
The guaranteed returns came under fire.
Yeah.
And some utilities found themselves in a bind.
Right.
They had made these massive investments based on certain assumptions.
Right.
And suddenly the rules of the game were different.
He specifically mentions Pacific Gas and Electric and Hawaiian Electric
Right.
as cautionary tales.
He does.
Yeah.
And then there's the whole issue of climate change.
Right.
He talks about how the increasing frequency and intensity of forest fires, which are often linked to climate change, have led to massive losses for BHE,
Right.
particularly in Western states.
It's a perfect storm for the utility industry.
It is.
Changing regulations, climate change,
Right.
escalating costs. No wonder Buffett's feeling a bit uncertain about the future of that sector.
He is. He even suggests that if private utilities can't attract the capital they need because of these challenges,
Right.
they might be forced to adopt a public power model, with the government stepping in to own and operate them. Imagine, instead of investing in a company like BHE,
Right.
you might be buying municipal bonds to support your local
Wow.
publicly owned utility.
Yeah.
It's a pretty dramatic shift.
It really makes you think about the bigger picture, doesn't it?
Right.
It's not just about picking stocks.
Right.
It's about understanding this complex interplay of regulation, climate change, investment, public policy.
Absolutely. It's like Buffett always says, invest in what you understand.
Yeah.
And sometimes understanding means acknowledging when the ground has shifted beneath your feet. But
Yeah.
hey, let's not end on a somber note.
Okay.
In the midst of all this talk about challenges and mistakes,
Right.
there's a real bright spot in Buffett's letter, the insurance business.
He does seem pretty happy about that. After those railroad and utility stories, I bet he was relieved to have something positive to talk about.
Yeah, he calls it the core of Berkshire's well-being and growth.
Okay.
And he reports record-breaking performance across the board in sales, in float, which is that mountain of cash they get to invest
Right.
from premiums before they have to pay out claims.
Right.
And, of course, in underwriting profits, this isn't just a one-time thing either.
Right. This is a business Berkshire's been in for almost 6 decades.
Exactly.
They've weathered storms, learned from mistakes,
Right.
and built an incredible amount of expertise.
Exactly. He even jokes about how they've learned too often, painfully,
Right.
about what types of insurance to avoid and what kind of underwriters to hire.
Right.
He says the ideal Berkshire Hathaway insurance underwriter can be thin, fat, male, female, young, old, foreign, or domestic,
Okay.
but they can't be optimists at the office.
He's got a point. You want someone realistic,
Yeah,
someone who understands risk, not someone who's going to slap a policy on anything that moves.
exactly. And no discussion of Berkshire's insurance success would be complete without mentioning Ajit Jain.
Right.
Buffett credits him with transforming their insurance operations
Right.
and sings his praises once again in this letter.
The man, the myth, the legend.
Yeah.
Buffett calls him indispensable.
He does.
Practically compares his team of insurance executives to baseball Hall of Famers.
Yeah.
It's clear he trusts Ajit implicitly and sees him as crucial to Berkshire's future.
He really does. Now, speaking of the future,
Okay.
there's one more thing I wanted to touch on.
Okay.
Buffett ends the letter with a series of anecdotes about what he calls the Omaha effect.
This is where we get a glimpse of his playful side, right?
does.
He starts talking about Greg Abel, who runs all the non-insurance businesses in Berkshire
Right.
and is next in line to be CEO.
Right.
The same Greg Abel who lived just a few blocks away from Buffett in Omaha for 6 years
Yeah.
and never even met him.
Never met him. What are the odds?
Astronomically slim. And it doesn't stop there.
It doesn't.
He brings up Ajit Jain, who also lived in Omaha,
Right.
just a mile from Buffett's house.
Uh-huh.
And of course, both Charlie Munger and Buffett himself were born and raised in Omaha.
That's right.
And then there's his sister, Bertie, who also grew up in Omaha and became a wildly successful investor.
Right.
He uses her as the model for the ideal Berkshire shareholder.
Yeah.
It's almost too good to be true.
I know. Buffett even jokes about it, wondering if there's something in the water,
Right.
the air, or some strange planetary alignment that produces all these incredible investors in Omaha.
Right.
It's classic Buffett, leaving us with a smile and something to ponder.
So what's the takeaway for our listener?
Yeah.
Should we all be packing our bags and moving to Omaha?
Well, a change of scenery never hurts.
Right.
I think the real message is that success in investing, like in life, often comes down to a combination of factors.
Yep.
Some we can't control, some we can't. We can't all be born in Omaha or have Warren Buffett as a neighbor.
Right.
But we can cultivate the qualities he embodies: patience, discipline, long-term thinking,
Right.
an unquenchable thirst for knowledge, and maybe even a little bit of Midwestern charm.
I love it. And if you're looking for more of that Buffett wisdom,
Yes.
he highly recommends picking up a copy of the latest edition of Poor Charlie's Almanac,
Yes.
a treasure trove of insights from his longtime partner, Charlie Munger.
Absolutely.
Right.
As much as we enjoy diving deep into these letters,
Yes.
there's nothing quite like going straight to the source.
Right.
So until next time, happy reading and happy investing.